Welcome to the free training. So as I said in the intro video of this, a lot of you are going to be struggling with clarity. You have a lot of confusion, especially with conflicting strategies on the internet. You have different concepts, you have different strategies. Everyone's telling you different things. You don't know where to go and where not to go, right? So it's very difficult to put things together. So I promise you, by the end of this free training, you're going to have a lot more clarity within your trading, and it doesn't matter what style you trade, it doesn't matter how you do things. We're going to push forward together, give you some real key things to actually focus on to frame a narrative from the higher timeframes down, and how to position yourself on the right side of the market, in flow with order flow, in flow with the path of least resistance, and capitalize on some of these trades. And I promise you, with the trades that I show you, there's going to be confirmation backing it up for transparency, because these are the trades that I took myself. So without further ado, let's dig straight in. So before we get started into the charts itself, we're going to touch on a few fundamentals and how to frame a high probability trade in the markets before we get into the markets. So let's have a look. Now, the problem that a lot of you are facing is that there's a lot of confusion within your trading itself. Like I said before, there's a lot of conflicting opinions, strategies, concepts. You see the difference between OBs, fair value gaps. You've got the weekly profile, you've got all these different things. Do you use all of them? Do you use a selection of them? How do you put this together and actually frame a profitable strategy at the back end of it? So we're going to go through that. That is the problem that a lot of you are facing. And the thing is, a lot of you are very close to consistency, but if you remove that noise and distractions, you'll be miles better off. So we're going to get to the bottom of it. Now, so the solution, as I've said, is the clarity, removing that noise, distractions from your trading, and on the back end of that, increasing profitability by following a simple yet proven edge in the markets, which the truth is, a lot of you are looking for that. We don't need the confusion. We don't need the over complexity of concepts. We just need to know what works very well, and double down on that environment. Now, in terms of framing a high probability trade, I want you all to bear this in mind as we go through the trades that we're about to take. First and foremost, a higher time frame directional bias. Now, this is built up from the monthly, the weekly. We're going to really focus on the daily here, but bear in mind that there is a monthly and weekly perspective involved in this process as well. And this is the fundamental to all great trades, because a higher time frame environment, although the markets are very fractal, holds a lot more weight because it is a higher time frame. It takes a longer time for these trades to play out. So with that higher time frame structure, there is a lot more weight behind it. So that's all going to start from that. Then we're going to focus on what is in alignment with order flow. For the majority of the time, we're going to trade in alignment with the week high or week low. And this is in line with current order flow. So let's say we have a bullish market environment performing higher highs, higher lows. We're going to play in alignment with that. Or if we get the instance where we have a potential week high, week low in place, we're also going to play along with that. So it's about adapting to the market. And then last but not least, in line with the daily cycle power of 3. Now, a lot of you will have heard of this. A lot of you may even use this. We're going to teach you how to do it in a simplistic manner, how we frame it inside Envision, keep things very simple and keep things very profitable on the back end. So without further ado, let's dig into the charts, starting with a trade on Eurodollar. Starting with the daily chart on Eurodollar, we're going to keep things very simple and keep it on the process at hand. So what can we see here within the charts? Well, this is where our minds are going. This is the process that we follow. So what we have is order flow is still technically bearish. We have lower low, lower high, lower low. How do we know that? These are external swing points. You can see it clearly. If you're ever struggling with how to actually identify that, all you need to do, simply just head over to the line chart. I know it sounds very simple, but you can see the external swing points: swing low, swing high, swing low. Everything else is just internal swing points, and that is liquidity, right? So these come in relevance in different points, but what we are focused on is the swing point itself. So order flow is still very much bearish. However, what we have seen is coming into the year itself, if we just mark this out, we can see that we've had this rally to the downside, right? And following that rally, we have then impulsed to the upside with this great momentum. So what this is suggesting to us, although we're in this daily POI, which is an OB to the left, which is what caused this clear regression. If I just zoom in, the reason I've got this pinpointed on the chart is that we've got to look at the origin of the move. So we've got the origin of this move from this swing high to this swing low. When price pulls back and order flow is going to continue to the downside, we're looking at these areas of reference of where we could potentially turn around. Now, we've obviously got this corrective price action leading down, price break structure to the left. We come back up, And then this is where the aggression comes into the market. You can see in this candle here, which shows me the intention is there to the downside. Now with this, we've also swept this internal liquidity. This is a great area for one of two things. Either a reaction. Now the purpose of a reaction is to build liquidity. So in this market environment, we're going to see one of two things, a reaction or a mitigation. A reaction, the purpose of it will be to fuel more liquidity above structure for then the market to move higher. So in a case like this, we are expecting a reaction. It's such a big area. There's going to be a lot of volume coming into the moves. The bigger players, if they are in corrupt positions, are going to be getting out of trades. There's a lot going on in these areas. So at a minimum, we're going to see a reaction. Now, what this usually looks like is a corrective piece of price action for the purpose of tempting people into the sells, getting people caught on the wrong side of the market to then fuel that move to the upside. And you can see this a lot of times before we even break structure. This is what tends to happen. Just to kind of focus your attention on this, it's the same thing as what happened here. So let's cover this together, right? We have a lower low, lower high, price really starts to showcase a lack of intent with breaking structure. You can see we just wick above. We know that wicks do the damage, bodies tell the story. We've wicked above, clear intention to the downside. We've paused here, right at the origin of the structure. Now what do? We push higher. Why? What is this? Is this a reaction? Potentially. How do we know that? Very corrective price action. It's for the purpose of getting people involved in the wrong side of the move. Now, with buyers coming into the move here, what is there going to be? Stop losses below structure. What does this create for us? Liquidity. So it adds more fuel to the fire to then fuel that downside pressure. Now, another thing we could focus on as well is this going to be a mitigation? Now, if this is going to be a mitigation, what it means is that this area is going to hold. So the price action that we're likely to see is going to be very impulsive. And if that is a true mitigation, we're going to see prices come all the way to the downside to start to target these lows in here. Or if we are going to change, we're going to start to change around these sort of areas here. So we need to pay attention to the nature of price. But the thought process here is we've come into this region with a lot of intention. Therefore, we can still play bullish pressure until the market changes. So at this point, looking for the market to potentially continue. And if we are going to change, we'll pay attention to it. The 1 hour chart, let's take a look. Now, to keep things very simple, we don't need to overcomplicate things. What do we have? Simple order flow. Lower low, lower high, lower low. Instead of price moving up and continuing for more order flow to the downside, what have we done? We've pushed to the upside with a new higher high. Now, you don't have a confirmation of a change in order flow until you see higher high, higher low, and a new higher high. Because there's nothing stopping price forming a new higher high. And then before that even happens, if we just remove this, what's to stop price continuing to the downside, continuing order flow to the downside, and then it's just a bigger version of itself. This is just a buy side liquidity grab to fuel downside pressure. So what we wait for is a higher high, a higher low, and then a new higher high. Once we've formulated this, we can then confirm the order flow for the time being has changed to bullish. So we can play that with pro trend. So we're on side with the daily. We are in a higher time frame area, but we could potentially continue higher. So we've got the higher time frames back in. We've got the H1 time frame back in as well. And now we're just looking for the actual things to line up. So what we do have is higher low, higher high. Prices come lower. Notice how we've taken out the sell side liquidity point, and we have this nice little OB to the left, which on the 15 minute, if we just look at this in a bit more detail, you can see is this clear range. It's also swept liquidity. If we were to really zoom in, you can see here we've swept liquidity on the way. So this is a great area for us to target, for us to come into, to then take a potential trade out the back of it. So the fact that we've swept that liquidity, we've come into this OB, is great for us to look for longs. So if we are going to look for longs, we're playing it as if we are to see the next higher low for price to continue to see the next higher high. And as long as that's done, the trend continues. So that is it on the 1 hour chart. We're now going to frame it from the daily cycle, which is intraday, right? So you'll see these little sessions on here. This is Asia. We've got London, and we've also got New York, right? So we're coming into Asia. We're just going to watch how price develops. And I'll also give you an indication of the indicators that I'm using as well, because I seem to get that question quite a lot. So the indicators for the session is Asian session range by FXN. Then for this, we've got PO3, okay? Power of 3. Now, as Asia starts to formulate, we can see, we'll just play this out a little bit more. We're in this consolidation mode, which is natural for Eurodollar. It tends to happen quite a lot. But then what happens? We come into Frankfurt, we sweep the lows, which at this point is still too early, not going to be taking any trades. This is still premature in my opinion for any trades. What I'm really waiting for is I'm tracking order flow. We can see lower low, lower high, lower low. In order to take a trade to the upside, I really want to see an expansion higher here with intention to showcase that aggression and the bigger moves, the bigger players coming into the market. And then all I want to see at that point is a nice little pullback into value to then take that trade higher. Now, what I wouldn't do is take an internal shift here. Now, I'll go into the big reasons behind that inside Envision. We talk about this inside Envision Mastery quite a lot, but the summary of it is that this could be potentially a trap because there's nothing stopping price moving higher here, triggering you into an early buy, and then all of a sudden we move lower and this just continues order flow to the downside. We've got lower low, lower high, lower low, lower high. You're in a trap. So we want to pay attention to what's happening within structure. We want to wait for that intentional break. Now, once that happens, I believe on this day it was very aggressive. So this, at this point, too aggressive for me. I'm happy just waiting on the sidelines, but there was an additional entry that a lot of Envision members took for themselves, which is incredible. So that was a great trade, but for me, I want to wait for a bit more confirmation. And it was here. Now, at this point, from previous styles and stuff like that, you may have thought, well, the move looks like it's gone now. You know, I'm gonna give up on the trade itself, but the truth is, no, it's not. So if we just watch how this plays out, we've obviously formulated this low here. We actually had a bit of divergence here between Eurodollar and DXY, which was great. I'm not gonna go into it on this webinar, but we did have divergence here, which then, you know, helped the trade itself. You can see the way the daily is shaping up. So if we look at this from a candle shape perspective, we've come into the day, we've opened up here, we've dropped to the downside, forming that Judas rally. This is very much likely, because we have that intention, the low of the day. And if that means the low of the day, it means that we're going to see a bullish day, which means we can take advantage of that. And any opportunity we get to buy, we can fully take advantage as long as we've got safe stops and we are getting involved in the right place. This is where timing is key. So as we start to forward this out, the reason I'm looking for a trade here is down to this reason. With impulse higher, if price is to break this region here, there's nothing below stopping price moving to the downside, taking out this low. Why? Because we've just got that intentional push. There's no range here, apart from this little OB in here. This is just pure intention, which means price is going to likely react from this range because what's inside of a range? Volume. Because this is where a lot of the bigger players are stacking the volume. This is where they're initiating orders into the market. This is that reaccumulation here. So I would want to play that, especially on the back of creating inducement. I'm happy to play that. Safe stops below this low, giving price more than enough room to breathe and taking advantage of that trade. And then already, before we even get in the trade, you need to know where you're going to get paid. That's key. That is going to create so much clarity in the trading. Know when you're getting paid. Too many people wing the markets, get involved and just end up holding trades, and that's when you tend to let 5, 6, 7% trades pull back to break even. There's no need for that. So know when you're getting paid. I knew I was getting paid at the swing high because order flow, if it's going to continue, we're going to take this swing high, okay? So on the basis of that, we've got the higher time frames, H1 order flow, we've got lower time frame intention and daily cycle, perfect. We're in the trade now, and you can see, just for reference, look at the ask price I was tagged in here, 0.04780. Look at the price I'm actually tagged in. So it's spit in image, the exact same price. Now, price does play around for a little bit. There is obviously management techniques we put in place to make sure we reduce and remove risk quickly and efficiently. But at this point, as soon as we even get into this leg before we even break structure, I've got risk removed, okay? Got risk removed because capital preservation is the ultimate key. Risk removed at this point, price impulsed, so stop loss doesn't just go at break even. Why? Because we're trading raw spreads accounts, which means that we're going to get charged a commission on the trade. Now what we want to do is also account for that commission. So I move it to break even plus commission to make sure that it is a break even and you're not getting slapped by commission costs as well. Okay, so we're just making this into reality of how trading actually works. But we're in this trade. This was a very simple trade to manage. Okay, so it's quite impulsive. Not every trade is going to be this simple, but you can see what does price do. We pause here once again before breaking structure. Why do we pause here? Tempting scalpers into the sells, early sells, but it doesn't mean that's the way the market is going to go. You can see just takes its time. As price is moving, this is where I'm trailing my stops as well. So there's no way, and you should think in this way, if price was to move all the way to the downside, not that it would do because we've got liquidity above, this is a clear target, right? But are you happy for a trade to run at 3.33% profit to then pull back and take you out for break even? For me, no. If you're trading much smaller capital, maybe that's okay for you at this point. But I would urge you to really trade how you will be on 6-7 figures in the future. Okay, that's your goal. That's your goal you want to get to. So you want to be trading that way in advance. You want to have a scalable model that's professional. You want to make sure it's solid, and you can make sure you can take it anywhere with you. Okay, so we've got liquidity above, trailing stops along the way. So at this point, I had my initial stop here. And then it might seem quite aggressive, but what I'm doing is every time price is coming lower here, I'm actually trailing my stop behind this as well, because there's no way I'm letting price pull back and give too much profit back to the market, especially as we come between 5 and 10 pips away from TP, right? And then last but not least, we then hit TP. Beautiful trade. You can see the confirmation here, 0.52110. You can see the price here that we tagged out at, very similar, for a beautiful 3.6% trade. Very simple. You can see there's a few mechanics in place and a few things you'd have to learn inside Envision to really get this to an absolute T nailed down, but you can see the process is the same. Daily directional bias in line with H1 order flow, which means that we're on the side of pro trend. We've got the lower time frame intention and daily cycle at play. Then it's just that mechanicalized model of an entry to then get involved in the markets. Now we have that little bit of understanding of knowing that price will not pull back into this region, and we can put things in place to then capitalize. But the same thing is true, same model, taking trades to the upside. What a beautiful trade. Now that's the first entry. Let's now take a look at another trade on pound yen. So now we're taking a look at a trade on pound yen that I executed for a short play. Now I'm going to talk you through the reasons why here. Once again, starts in the higher time frames, very simple. Let's talk through it. Now this is just that in-depth understanding of the market, but we can keep it as simple as possible. What do we have? Well, we have price steadily moving higher. We have price formulate this high here, comes lower, sweeps liquidity to the left. You can see wicks do the damage, bodies tell the story, no intention, pushes higher. Now notice that price fails to break the previous swing high. That is ultimate key, okay? Price drops lower, liquidates the lows, comes higher, and you can see that this high that was correct here, it protects this high to the left, okay? So as we're starting to move lower, especially when we gather this intention here in the move, we understand that this is now likely a weak low, which means it's liquidity. It's a target for price to want to gravitate towards. And then we had a sign for price to potentially move higher in the respect that we had this low form. This low was then taken here. You can see we had that initial intention. This was an internal shift in market structure. So at this point, looks great. Nice corrective pullback here. But the thing is, if we're going to move higher from here, we had a very clear chance of doing so. So let me just highlight this for you. If price is going to move higher from here, we would have done it from the Monday. And the reason I say that is if we just rewind price a couple of days, you look at that price action, we've liquidated the lows, pushed higher with intention, nice corrective pullback. We've ended the day, you can see, with a very strong close. If that's going to continue, we're going to see that intention just continue to rise, and we're going to achieve the target of this as a minimum, right? But what happens the day after? We don't show that intention. The same day, next day, don't show that intention either. This is on a Tuesday, so we've likely already formed the high of the week. We've expanded lower. At this point, we can adapt a little bit and say, we know what direction the market's going to move in. We're looking now to target this low and this low, right? So we can look for that target, and then even more so, this bigger week low as well. So daily, is very much bearish at this point. Bringing it onto the 1 hour, we can see this in a little bit more detail. Lower low, lower high, lower low, higher high. So we've had a potential change in order flow here, but notice how I said potential. It's not confirmed until we get higher low and a new higher high. That hasn't happened at this stage. So we've formulated this higher high, come lower. If we were going to continue to move to the upside, as I said, we would have done it out of the back end of this clear rejection from the origin of this move. But then what happened? We pushed higher. We took this previous swing high, very little intention. How do I know that? Let's make it as mechanical as possible. Lack of intent. Wicks do the damage, bodies tell the story. Does that break with wicks or bodies? Does that showcase aggression or no aggression? No aggression. Keep it simple. And then what we have after that is that clear reversal take place. We drop to the downside. At this point, it becomes very evident that we've got a weak low here, and also a weak low here, which is the previous monthly low, which is a very key target for us to look to target. And then what happens is, if we just play this out a little bit more, price takes this first initial low, but once again, the narrative still continues because this low is still prevalent. Now, what I liked about this is that following this break, you can see we've broken this low, we've broken intentionally, and then we've pulled back into this 1 hour area. Pulled back into this nice 1 hour area. You can see it's picture perfect, just taps in. This is the accuracy that we're dealing with here. And then if we look on the lower time frames, we can start to talk our way through it as well. Now, what we did have, if I just move this out of the way, is we have this. Coming into the trading day, which was 10 p.m. GMT, what do we have? The open of the market here, represented in this candle. We have a little false rally to the upside. So I already know, following this intention to the downside, this is likely the high of the day, which means that we're going to see a very much a bearish day. This is not going to be taken, and we can look for continuation of plays to the downside. Asia highs is here. Notice how price comes up, takes that previous session high. What happens? Is that an intentional break, or is that no intention? Remember, wicks do the damage, bodies tell the story. Liquidation, breaks to the downside. Okay, so we're starting to show that intention coming into the London session already. Now we break lower. Now, as soon as we got that inducement form, order was set. Order's set here at this point. Right, so order's set. I then removed my order once we've broken Asia lows, and then came back to it once I realized that we were going to pull back. Okay, so we pulled back. Price came up quite aggressively, but nothing had changed at this point. Still a safe stop below, behind the structure. We've got that buy side liquidity sweep, expecting this to continue moving lower towards the previous monthly low, which is here, right? So very obvious target in mind. Now, we're tagged in. I actually took this as a manual trade, so you'll see a little bit of a difference between the price here on TradingView, which is 214, and then the actual price, right? So I'm actually tagged in as price is moving roughly here, right? As price is beginning to move, this is what the accurate representation of the entry looks like. We're tagged in, price doesn't mess around. At this point, we've already broken. My stops at this point are break even plus commission. Once again, you'll notice this is a very simple, similar procedure. And then as price is moving, what we're doing, we're trailing stops. Simple thing. Okay, price continues, and you'll notice as price is moving towards TP, all I'm doing here is just managing behind the little swing points on the lower time frames, because the truth is I don't want price to pull all the way back to break even when it's running at 1.7, 2%. There's no need to give that profit back. So I'm happy to be a bit more aggressive. And then you can see price then expands and hits TP for just above 3%. So a very beautiful trade, but you can see how did we know that was available? Well, we had the daily on side for a week low. We had the H1 order flow that had potentially changed to bullish, but was not really representing a true picture of that. So we knew that price was going to move to the downside. Lower time from intention daily cycle, we'd already formed the high of the day. We've shown intention. It was just a case of actually pinpointing the accurate entry to get involved in the move itself. So beautiful trade. You can see the confirmation on the screen of this trade that I actually took myself. And this is another clear representation of trades we take. To finish things off, you can see just how simple we really keep things. Just to take away as added value, you want to make sure that you are in line with a daily and higher time frame narrative. Then you want to make sure you're in line with order flow or a trend in market, because if you think about it logically, for you to try and call the tops and bottoms of the market, you're going to result in a lot of losses. If it works for you, stick to it, it works for you. But if you're losing money in the markets, you've got to really question these things, right? So being on side with the flow of the market, the path of least resistance, which is in a trending market, you're pro trend, there's going to be a lot of fruitful plays for you. And then lower time frames, just making sure you're keeping things simple. You understand the mechanics of how the market moves on a day-to-day basis, as we discussed here. And we obviously discuss a lot more in detail inside Envision. And then you can go from there, frame this higher time frame narrative into a high probability trade and take full advantage of these positions in a live market environment, as I've shown you myself have done, and also a lot of the Envision Markets members also took as well. So there's a lot of opportunity. It's just understanding how to actually capitalize in this market. Since Trump is involved and there's a lot of volatility, there's a lot of opportunity. It's just up to you to stop losing money now, cut out the confusion, and focus on clarity within your trading. And my final message to you would be, if you are still losing money in the markets, you need to question why. Have you got a lot of confusion in your trading? Are you doing something incorrectly? Do you have a lack of understanding? Put the pieces together and focus on clarity. And I promise you, if you make that change, you'll be miles better off. And it's a case of the way we frame things inside Envision is from a clarity standpoint. We'll teach you the mechanics of how to frame a high probability trade, how to be successful in the markets, how to be consistently profitable, how to make this a full-time thing if that's what you want to do. Or if you want another business on the side, feel free to do the exact same thing as well. But we teach you how to do this via a proven simple strategy. Obviously, we have the mechanics in place with the courses, we've got the framework, we've got the coaching, we've got the mastermind, the journal review calls. Everything is in there for you to succeed. Remember, nothing changes unless you change. So here's the time today to make that decision, change things, and change your trading and life forever from this point forwards. So overall, I look forward to seeing you inside Envision. Please book a welcome call once you join, because you'll be able to talk to myself or a team member. You'll get an exact roadmap of the content to follow, how to speed your journey up and get to that point of clarity even quicker. But I hope you've enjoyed this. I'll see you inside the group. And any more questions, feel free to message me once you join Envision as well.